Hello and welcome to Crypto News. Today is January 2nd, 2026, and the top crypto news is as follows. First of all, have a good month, everyone. The month enters strongly with Bitcoin at $78,000, with the price dropping to $75,000, down from $76,000, and holding us back from some old support we had from April 9th, 2025. Of course, the liquidations have been on fire, with $2.6 billion gone in the last 24 hours. First of all, as you already know, gold and silver have collapsed, with silver having its worst decline since 1980, and the icing on the cake comes from the US, which ended up closing shop once again. Let me tell you now that compared to last time, things are a bit better because last time they disagreed, and that's why it took 43 to 44 days to go to signatures to give money to the US. This time, it looks like there was supposed to be a meeting on Friday, and they just didn't. As a result, the US was officially shut down, as they say they will do it on Monday, Tuesday, Wednesday, so the signatures will be in to keep the US operating. So in theory, it won't be closed for long, but you're definitely not hearing good news. So that's the last 24 hours. But now I want to take you back a little bit, and I want to take you to the big crash that we had on October 10th, 2025, where $19.2 billion was wiped out of the market, which is unusual for our market. It was a very devastating day. Now, months later, the founder of OKE, a very large exchange, says it's all Binance's fault. Thus, OKX founder and CEO Star Shu claimed that the crash was neither complicated nor accidental, but the result of irresponsible performance campaigns that pushed traders into leverage loops they didn't understand. Star argued that the risk started when traders were forced to treat USDE like cash. In his account, users were encouraged to exchange stablecoins for USDE for attractive returns, then use the USDE as collateral to borrow more stablecoins, convert them back to USDE, and repeat the cycle. The loop created a self-powered leverage machine that made returns appear safer than they actually were. Binance users were encouraged to convert USDT and USDC into USDE to earn attractive returns without sufficient emphasis on the underlying risks. All this was mentioned in this tweet, in which we learned that the APY ranged from 12, 24, 36% to 70%, which is not at all possible to offer. And let's say that Mr. Tom Lee from Bitmine told us a few days after the crash that there is a stablecoin on an exchange, a very large exchange, that went down. Obviously, we don't know if this is the case the CEO of the OKE was talking about, but it could, as you understand. And Mr. Anatoly Yakovenko, the co-founder of Solana, posted the tweet of Mr. Star, the CEO of the OKE, which describes everything I told you. And as it sounds, not sure, but Mr. CZ, CEO of Binance, unfollowed him on social media. This may sound like a very small thing, but in the world of social media and influencers, unfollowing someone is the equivalent of a very bad divorce. Now, from Binance's side, they are telling us that it's not their fault and that it's the market's fault. In an article published on Saturday, where Mr. Star also posted this first tweet blaming Binance, the exchange said global markets were already under pressure following trade war headlines when cryptocurrency markets collapsed. Bitcoin and Ether had rallied for months until early October, leaving traders well positioned and exposed. Therefore, Binance does not believe they are responsible, and I will have their full report in the description for you. So aside from whether Binance is to blame or not, some who suffer a lot, apart from most traders and investors in the crypto market, are those involved in Bitcoin mining, as Bitcoin's hash rate drops 12% in one of the worst drops we've seen since China banned mining. This is our chart from CryptoQuant, and as you can see at the end on the right, the hash rate has dropped so much and so sharply that it is equivalent to the drop we had in October 2021. And the main reason is that the miners are not making money. As we can see again from CryptoQuant, miners' profits and losses are currently extremely underpaid. That is, it costs more for a miner to mine a Bitcoin or a Bitcoin block than the profits they will make. They pay more to maintain the equipment and run the equipment than the money they will make in that period. Although Bitcoin exporters are used to it because that's how they play their game. One period you will make money, the next you will not make money, so you will eat from what you made the previous time. That wraps up the top news for crypto today, January 2nd, 2026. I'd like to remind you that the content you just watched is created for educational purposes only and should not be considered as investment advice, but rather as investment opinion. Please subscribe to the channel, leave a like, and feel free to comment. Take care, everyone, and have a good day.